Stock Market 101, a beginner's guide to investing. So in this slide presentation, it's very beginner friendly. I'll break down everything. So to start off with, what is the stock market? Whether you're looking to grow your savings, prepare for retirement, or simply understand what all those numbers on CNBC mean, and I refer to articles on CNBC when I'm talking about earnings reports, etc., and stock market updates. So the basics of the stock market, that's what I'll go through here in this slide presentation. So the stock market is essentially a marketplace where investors buy and sell shares of companies. That's put simply. So what is the stock market part 2? I hope you like my little pictures as well. I found these online. They're under images, non-copyright images, so I've just found them and stuck them in here in this slide presentation to hopefully enhance things. So think of it like an auction, but instead of bidding on art or antiques or cars, etc., you're buying pieces of a company. So when you purchase a stock, you're buying a small ownership or stake in that company. And you can buy fractional shares on some brokerage accounts, and on other brokerage accounts you can only buy full shares. So that's something you have to look into as well. When a company does well, the value of its shares typically goes up, meaning your investment is worth more over a given period of time. So how does it work? So the stock exchange, you have the two bears here. I thought this was an appropriate picture, going up and going down. So if a company struggles, the value might go down. That's the basic idea, but of course there's more to it. Well, stocks are traded on stock exchanges like the New York Stock Exchange or the Nasdaq, the Irish Stock Exchange, the London Stock Exchange, the Euronext. There's quite a few, the Hong Kong Stock Exchange, etc. So there are platforms. These are platforms where buyers and sellers meet to trade shares. So if you're familiar with supply and demand, price and quantity in economics, so if more people want to buy a stock than sell it, the price goes up. So if more people want to sell than buy, so if there's fear, the price goes down. So the share price of stocks are driven by buyers and sellers, and it's kind of like, think of it like a tug of war between the two, and that's how it all works. So each stock has a ticker symbol, a unique series of letters that represents the company on that exchange. So on eToro, DeGiro, for example, you can type in the company name, like for example Apple or Amazon, or you can type in a ticker, which is just an abbreviation for the company, AAPL and AMZN. They're the two for Apple and Amazon. So why invest in the stock market? Historically, the stock market has provided higher returns compared to other investment types like bonds or savings accounts over time. Not guaranteed, of course. By investing, you have the potential to grow your wealth over time and even beat inflation. However, with higher potential returns comes greater risk. And especially if you're using a leverage margin account, that's a whole other topic for another video. So stock market risks. The stock market can be volatile in the short term, which means prices can swing up and down. But over the long term, the market has generally traded upwards. But you have to be patient and hold on to your investments and be able to tolerate the risks of them going up and down and fluctuating. Buy individual stocks, which means investing in specific companies you believe will do well. Or you can buy mutual funds and ETFs, which are collections of many different stocks rolled into a basket of one. So you're buying, say, the S&P 500 is the top 500 companies in the US, and if you buy the S&P 500, you have a small piece of each of them companies. So this spreads out your risk because you're not just relying on the success of just one company. Yeah, so you're investing in a group of companies as a whole. For beginners, index funds are often recommended because they're less risky. These are a type of ETF that track the performance of specific market index, like the S&P 500, the top 500 companies in the US, for example. Investing in an index fund gives you exposure to a broad range of companies, which can help reduce your risk, as I said, rather than just investing in individual companies. But there's one thing to bear in mind, that certain brokerage accounts, you need to have more money in it to be able to buy the likes of the S&P 500. You can't buy fractional shares. Other investment brokerages, you can buy fractional shares. So that's something you have to look into as well. First, open a brokerage account. I have a brokerage account with eToro and DeGiro, and then I demo trade, which I'd highly recommend doing as well. Do that trading 212. So I've always continued to demo trade as well as live trade, because I'm testing out other strategies, other stocks, seeing how it would be with leverage versus non-leverage, using more money, which is fake money, rather than just a few hundred, which I have in the live accounts. So that's something to do. I'd recommend using paper trading or demo trading for 6 to 8 months before ever using real money. But one thing you have to note, like the DJero, you don't have the option to demo trade. You do on eToro and you do on Trading 212. Again, things to look into as well. So opening a brokerage account, this is where you'll buy, sell and hold your stocks. Next, decide on how much you want to invest. It's smart to start small, and as I said, demo trade or trade with fake money for quite a while before you ever open a live account with real money. Never invest in money you can't afford to lose. Very important also. Finally, do your research before buying any stocks. Look into the company's performance, its industry and future prospects. And on your brokerage account, the likes of eToro and DJero, not on the demo account, but on the live account, when you invest real money, you have access to quite a bit of information, the balance sheets, the cash flow statements, whether analysts buy or sell or hold ratings on stocks, insiders, whether they've bought or sold, etc. So there's quite a bit of detailed information to help guide you. There are also plenty of resources and tools online to help analyze stocks and make informed decisions. And my YouTube channel is another source. So in conclusion, and there you have it, a quick introduction to the stock market. Remember, investing is a long-term game, and it's important to stay patient and informed, and it very much is. So the stock market can be unpredictable, but with the right approach, it can be a powerful tool for building wealth over time. But if you have only a small account, you won't have massive gains, but you won't lose a huge lot either. So if you found this video helpful, please give it a thumbs up and subscribe for more beginner-friendly tips. So I hope you enjoyed this new format. I do like putting these kind of slide presentations together in Google Slides, and hope you enjoyed it. Till next time, take care. Thanks for watching.